Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of natural gas. So we have this wedge pattern that we have been studying for a while on natural gas that has finally broken out. We did have a couple of different entry points along the wedge in the past, but unfortunately both of those trades did get stopped out. Let's hope this is the third time lucky and that we're in it for the long run all the way to our more ambitious targets, hopefully. So the breakout has been impulsive, to say the least. We did have a gap up above the downtrend line with a couple of nice green candles. So that is definitely a check mark for the bullish case. And we've obviously got the classic trade setup. It's a bounce off support. You can see if you zoom out, you're gonna see the support right here. So we did get a nice little bounce off support, and we had that MACD divergence that I was talking about here. Right there, the MACD was starting to rise as we were bottoming out, and same thing with the RSI. You can see we made a higher low as the price made a lower low. That just means the downtrend that we saw along the wedge has come to a slowdown, and it indicates a potential reversal, which is for now exactly what happened. And you can see, I'm going to show you an example right here at the bottom of the wedge. You can see the MACD was already starting to point to the upside. So that is definitely something that I look for in my trading, in my trade setups, when the momentum indicators start to point in a different direction than the price is actually going. It can be pretty indicative of certain changes in price action. And looking at the MACD right now, we can see we have a nice clean separation right here. So that definitely is good news. It means that we're starting to pick up momentum to the upside. When you're starting to see these nice clean separations, that's when there is profit to be made, whether that is to the upside or to the downside. So again, for now, we do have most check marks for the bulls. So far, so good. I am looking for a couple more things before I'm overly confident on the trade. I did take a position at the break of trend line, so I am definitely officially long on natural gas. But for me to actually be 100% convinced that this is the real deal, I want to see this this resistance level being broken. This is a consolidation zone that we were hovering around for weeks almost here, and so this definitely created some resistance that we should be able to break right now. And judging by the current momentum of the lows, we've got a nice 6 day momentum that could definitely break this level and put it in the past. And the main reason I am looking for this is so that we can raise our stops and already book partial profits and raise the stops all the way to the top of that consolidation zone, so that I know that if we start breaking above this resistance level, if it starts dipping back below, then that is bad news. So breaking above would give us some safety going forward to hit the next targets. So speaking of targets, I am looking for my first target, which is right here. No, I mean right here. This is the first target, this 2.076 level. This is target number 1, and right now we're not too far away. So again, a break of this level would definitely create some support behind us and enable the price to bounce off of this level to reach the first target in a relative short amount of time. And you can see that we are actually breaking the level, so that is good news. We're starting to poke through, so that is definitely something good to see for this trade. Now, obviously, things don't always go our way, and that is something that we do need to be prepared for. The proof is that we did get a couple of failed trades on this wedge. So I am going to lay out the second most probable scenario, apart from going straight up, breaking this level, and then hitting our targets. We could be seeing a rejection off of this resistance level, and if we do see this, it would probably end up backtesting the wedge, and hopefully again bouncing off of it, and then continue the trade that we started. I hope this won't be the case, because that would actually mean we need to hit our stop, so exit the trade and then re-enter on a backtest. So again, it's a lot of entries for just one trade. But again, this is part of trading, and to really be a successful trader, you need this perseverance. You need to be confident enough in your trade to have multiple exits and multiple entries before you actually get what you want out of it. And I know there is a fine line between perseverance and being stubborn, and that is actually what differentiates a good trader from a bad trader, because you need to be able to tell yourself when your trade is dead, when you have to give up on a trade. And right now, in my honest opinion, I do not think that this trade is dead. Even if we start rejecting off of this resistance level again, we could see a backtest and an impulsive move off of that backtest. This is definitely something I've seen multiple times on natural gas, and I learned this the hard way. People often give up on a trade at the backtest, and then the backtest happens and the trade goes exactly how they planned out. And going back to this scenario, this would actually put in some extra divergence right here. The price would be probably making a lower low than we saw right here, and the RSI would definitely extend the divergence that it started making right here. So that would definitely increase the chance of the trade actually happening afterwards. Now we're gonna take a look at the longer term chart and see how I came up with this more ambitious target of $2.9. This is not the first time that I have $2.9 as a target. We actually hit that target right here in November, but we are going to take a look at the weekly chart to see that in more detail. Alright, so on the weekly chart, you can clearly see we still have the divergence that I talked about in my last videos. Again, we're making a lower low on the weekly chart, while the MACD is making a higher low. I can show you many examples in the past where this led to huge gains for natural gas, including here in 2015, 2016. We had two consecutive lower lows, and then we had huge rallies following that. And same thing here, 2017, 2018, huge rallies following that. So right after a period of excessive downfall in the price, I would not be surprised that this divergence ends up being very consequent in the rise of the price of natural gas. Now, another thing that we can see on the weekly chart is this MACD crossover that we're starting to see. Again, this is a momentum indicator, so when you have these crossovers, they tend to have longer term implications, especially when you see such a crossover on the weekly chart. And we haven't crossed over just yet, but it does seem like it definitely could, especially if our day trade setup starts hitting our targets. We're we're gonna see the first two targets get hit, and that's when you'll get the crossover on the weekly, and then we'll be able to aim for higher targets because that divergence will be confirmed with that crossover, and it'll be a system of dominoes, and that's often what happens in trading. You're going to take a look at the shorter term outlook, and as the shorter term flips from bearish to bullish, well, the longer term charts will start following right after. So that's about all I wanted to cover on this video. Again, if you hadn't noticed, I am still unbelievably bullish on natural gas. So I hope you guys enjoyed this video. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.